Raunak Onkar, head of research with PPFAS Mutual Fund, now joins us. And Raunak, you're the only one who is invested in FANG stocks as a mutual fund in India.
Right.
And when you see such strong market cap additions, you go to ask yourself, are they real or this is an indication of a bubble happening in FANG? Because a bubble in FANG means trouble for the world.
Well, thanks for having me today. The whole point about FANG stocks is they were available at very cheap valuations, say 3-4 years down the line, when numbers were not there. And now when the business has been proven, the numbers are coming, there is volume growth, and they are seeing expansion in different geographies. I think it makes sense to look at these companies. You can't just ignore them and say that, oh, we don't invest in tech stocks anymore.
Okay, so let's talk about Facebook. That's the hot topic with such a significant jump in their profits, 70% almost coming in. The only problem area is that, they have this entire fight to kill fake news, which experts do believe that may hurt their profit margins eventually. Are you concerned at all, or are you just riding the wave on Facebook?
We are concerned from the point of view that it will put off some users from using the platform more frequently, but that is still a small percentage. If you look at the daily active users, it's a billion and a third, and 1.3 billion users just go on Facebook every day and do whatever they do, and that kind of gives advertisers the comfort that there is somebody who is viewing the platform every day and they can be targeted in a specific way. And that's the structural theme that has been playing out for the past decade, at least, in these businesses.
But at what point would you look at booking profits? Because I was asking this question to Mahesh Patil also. Any incremental money that comes into the fund and goes into these investments raises the cost of investment on an overall basis. At what point do you say, I've made enough for my investors, so let's, if not complete profits, let's take part profits?
So in this case, the market itself is expanding. Nobody knew how big the digital ad space is going to grow. So if you are invested in these themes, you might as well wait and see. You cannot just, every point you sell, you have a chance of either regretting or a chance of waiting too long and regretting afterwards. So regret is on both sides. The point is to see if the business is steadily growing, and it is. So that gives me comfort enough to hold on to them for a bit. When we sell, it's totally dependent on a lot of factors coming together, including business slowdown.
Okay, now we've had chat, a couple of very engaging conversations with you on where pharma is headed. And now it appears that based on the news flow which has come out for DVs, the news flow which has come out for Natco, that don't write off the India pharma franchise. Yes, there is a reset in the global pharma industry for generic pricing, but Indian pharma companies selectively can bounce back.
Yes.
So after this big reset, which are the pharma companies or sub-themes will survive?
So the main theme that we are banking on is to build a portfolio of stocks in pharma companies where we don't know which company is going to lead for sure. But so we know that, not buy everything, selectively buy companies who have a good balance sheet to basically take advantage of bigger companies dismantling globally because of leverage or other reasons, or they want to seed market share in products which are not as profitable for them because they have a different high cost manufacturing base. Secondly, we need companies who have a strong product pipeline, and thirdly, we need companies who have relatively had a brush with the FDA over a period of time, but now they can emerge out of it with a low cost production base coming up online.
Give me an example.
For example, IPCA, which has the lowest cost production of drugs in which they sell. Example of Dr. Reddy's, which has these properties available for selling in the US markets and other markets in the world. And they have a decent product pipeline in complex generics as well as biosimilars. Lupin, for example, is another stock which we are tracking. So there are many more companies. The more we track, the more nuanced understanding we get about these businesses. I think we can balance our portfolio. And since we don't take a large position in one stock, we are not dependent on the company's fortune completely.
The one space where you don't have exposure is PSBs. Are you planning to review that thought at all? Or any of the corporate banks like an ICICI Bank, Axis, etc. added to the list?
So in the financials part of the portfolio, we have the three private sector banks, HDFC Bank, ICICI Bank and Axis Bank. We keep reviewing, we keep reviewing public sector banks, but really what we are seeing now is the recapitalization is only going to help the balance sheet, but the culture of lending takes a long time to change. I mean, if you see the private sector banks and the growth in the private sector's bank, it has been over the past couple of decades when they have perfected their business model and scaled. And they got a good tailwind because of public sector banks ceding some market share to them. So I think that theme is still in play, and there will be some problem in terms of competition going ahead. But I think private sector banks are at scale and they can operate.
What about ICICI Bank and Axis Bank? What's the conviction there, given the barrage of news that's hit both these stocks? And for ICICI Bank, it's been a classic laggard.
So relatively, ICICI Bank is valued lower than Axis, and Axis is relatively valued lower than HDFC Bank. That has been the trend for a while. So based on that, we have a quality matrix in our mind where we think that one bank is better than the other in terms of quality, and we keep adjusting that view as the numbers keep coming out. And I don't think there is a different story over there. It's the same story, but in different sizes in the portfolio, which completes our financial exposure there.
Are you still hoping that the arbitrage which Maharashtra Scooter has to offer will be equalized and the company is going to be dissolved and minority shareholders will get their due?
Not sure the company is going to be dissolved, but yeah, like we spoke last time, the gap should converge because now minority investors will have more say.
What is the gap right now?
I think it's about 45 to 50%.
Sorry?
45 to 50% of the underlying.
So the net asset value of investments for Maharashtra Scooter is how much?
I don't know the exact number, but Maharashtra Scooters and Bajaj Holdings, if you look at the market caps, is basically half of the underlying's value in the portfolio.
Okay, Raunak, we would have loved to chat more, but thanks so much for taking the time
for having
and
me.
speaking
Thanks,
with
guys.
us today.